Yo, what is going on, everybody? Welcome into today's video. I know I haven't posted on YouTube here in a minute, but today I have a great video for you guys, and most importantly, I have an announcement to make. So, it is official. The second round of the one-on-one mentorship has been released. By the time you're seeing this video, you are able to click the first link in the description and book in a call to see if you're a good fit for the program. And with this program, it does something that nobody else can guarantee you, and that is that I guarantee that we will not stop working until you get a payout. And this isn't some BS program like TJR's where you sit there with 500 other people who just dropped $5,000 to sit here on a Discord call for 30 minutes each week and don't even get the chance to actually talk to them. Me and you will be talking 2 times a week, 2 calls a week, and you have 24/7 access to my phone number if you ever have any questions, need help, anything like that. And for those of you guys who join the early access waitlist that I post on my Instagram, you guys will know that spots are already filling up in the early access, meaning there are limited spots available for the public as of this video dropping right now, because I'm dropping this video exactly at noon, okay? So that means that once this video is posted, spots are open, so act quick. The link is the first link in the description, and yeah, like I said, we do not stop working until you get the payout and you reach profitability. And I'm here not just to transform your trading, but to transform your life. Get you to that goal you want to be at. Get you to quit your job and become a full-time trader. Get you to that profitability that you so desperately want. And this has been the case for some of my other mentorship students from the first round. In that program, we had people like Brandis who were getting their first payout in 5 weeks after never trading ever in their life and quitting their job. You got people like Ben who was working a job and they got a payout with my funded futures after a couple months. Or Andrew who achieved profitability in high school in 6 months. Andrew does not have to work a job ever again in his life. And that's just a couple of the case studies I've done with students I've worked with, and you can be the next one. Like I said earlier, visit the top link in the description to book in a call and see if you qualify for the one-on-one mentorship program. Now, let's go ahead and get into the video. Alrighty guys, let's go ahead and get started. So, this video is going to be what has the highest probability, trading continuations or reversals, and why I'm personally switching the way I trade because strictly of this, okay? I hope that makes sense from what I just said right there. And recently with Maze PA, I think everybody hasn't done as good as they usually have done, or for the most part, most people have, especially ICT traders. And one thing I've noticed is that I've been really focused on trading reversals instead of continuations. And when I heard this, I was like, I haven't really thought about it that way. And one way that basically makes this make sense is that I've always preached there's a class in the inner circle based off of, it's strictly based off of displacement. And that whenever you see a massive displacement move in the market, you don't want to try to fade displacement, okay? Let me move this over here so you guys can see it. I don't know if my webcam's in the way. But when you see displacement moves, you're not trying to fade that displacement, all right? If anything, you're going to wait for price to rebalance the displacement, and then you're going to trade lower, okay? This is what I preach. And then when I thought about this, I was like, think on a higher time frame scale because all of time is fractal, okay? This could be a 1-minute candle. This could be a daily candle. So I really started to think, what if I stop trying to trade something like this? What if I stop trying to trade this? And what if I just start trading, something like, okay, this is not deleting. I don't know why. Okay, but what if I started trading something like this? So it'd strictly just be entering a continuation. Okay, so a continuation short. So I'm going to teach you guys how to do this because I've been back testing it and I've had pretty good results. Okay, they're basically lined up with my original AEM back testing, sitting around like in like the mid 80% win rate. And what's really important is having high win rate with this. Okay, so here's how to actually trade the continuation model. So right here, we do have a market maker sell model. All right, we have our accumulation, small little manipulation move, expansion to the upside, consolidation, and then we have an IFEG up here after this short-term sweep of liquidity, meaning that this is a good setup to short. But let's say you missed this. Well, first of all, what you want to do is you want to find a draw on liquidity. All right, this is a market maker sell model. Where do we know price is going to? Price is going to that original accumulation zone or the initial manipulation. All right, because look, accumulation, manipulation, distribution. All right, so let's go ahead and just mark out this low because this is a very key level of liquidity. It's a swing point. It's a manipulation move. All right, let's also mark out this fair value gap right here. Price is going to want to fill this. All right, so now what we're going to do, we're on the 15-minute time frame. Let's scale down. Okay, maybe not that far down. Let's go like the 5-minute. All right, so what you're going to do, you're going to mark out your premium and discount zones. So you're going to take your fib tool from bottom to top. right here. You ideally want to short over equilibrium. You might not always get an opportunity, but this is where time becomes fractal, and I can show you. All right, so look, we have equilibrium right here. Now we're basically going to see if we can get some sort of entry going to this draw on liquidity. All right, because I know prices already started the move. We have missed this move. This is an A plus AEM setup, okay? We've missed the move, so now we're just looking to continue this trade pattern, all right? So here's what you're going to do. You're going to wait for displacement. All right, here's your displacement, okay? So you officially have confirmation that price wants to displace under equilibrium. Now what you're going to do, you're going to wait for some sort of either retracement back into this displacement leg, or you're just going to scale the time frame down and see what we can find. And as you can see right here, we're just displacing. We're unfortunately under equilibrium, but we still have opportunity. So as you can see right here, we do have an inverse fair value gap. And perfect enough, we have a retracement to the consequent encroachment of it right here. Okay? Meaning that the second price closes under this gap, I'm looking to continue the shorts to our draw on liquidity. And with this, you can have a really small stop loss, like right here. Okay? Now, you can either target here, you can target here. Up to you. So this is basically what you're looking at. You're looking to continue the trend because you did miss it. Alright? Now look right here. Let's just mark the premium and discount. Say you missed this leg. Okay? Price trades into equilibrium. Let's scale down the time frame. Okay? Price has a bullish inversion right here. Let's see if price will invalidate it on like a 2 minute. Okay, now you're looking for shorts because you're in a premium. Let's see if you get some sort of entry here. Okay, let's go to the 2 minute. All right, we have this IFEG right here. If we get a close under it, we will. Okay, that's your entry. You can go short again here. So you miss that initial move. Now you're going short right here with the stop at the high, targeting your next draw on liquidity. So originally you were targeting this gap right here, which I believe was the 15-minute FEG, but now we still have our draw on liquidity lower. Just drag this out. Okay. As you can see, both of these trades hit TP. Say you never exited this one, bang. So you see, you had two opportunities here, and this is for if you missed this initial move at the top. Okay, because there was a great move at the top on the 15-minute. So you're just looking to continue price to the draw on liquidity. So the only downside with this example is that we were shorting in a discount, but because this was such high time frame, you would have to scale down to a lower time frame to mark out your premium and discount zones, which is what I did with this one right here. I know it's a little hard to see, but we essentially just marked out premium and discount from this price leg. Okay, so that is what you're looking for. You're looking to continue your trade using IFEGs and CISDs to the draw on liquidity, which was this fair value gap and was also this low right here. As you can see, we might even get a reversal here because this was such an important draw on liquidity. That's our first example with the continuation model, trading in basically a market maker sell model kind of framework. So let's go into another example. All right, so here's another example. I know my webcam, I don't think it should be in the way, but here's a draw on liquidity right here. All right, it is kind of far away. With continuations, you want to find near ones. Okay, so right here we have price displacing for these lows. All right, so I'm very confident that price will hit these lows. We'll have to see if we get an inversion to the downside to hit these lows. If not, we'll look for inversions to potentially go lower. All right, so price is obviously selling off. It's displacing. We're bearish. Okay, looks like there was no entry here. We've swept this as well. All right, let's see. Will price reverse here or will we continue lower? All right, so now we're going to scale down the time frame. All right, looks like we're inversing to the upside, giving a little bit of a pullback to basically rebalance this displacement move. We're rebalancing it to equilibrium. So now I'm going to sit here. We're expecting bullish PD arrays. Okay, setting up nicely. Now let's go back to the 5 minute. Okay, what is price doing? First of all, we are basically respecting this fair value gap. We're over premium. So right here, we are respecting this fair value gap right here. All right, so first of all, we have price basically trying to rebalance this range right here. And then we see this fair value gap right here. What is price doing? Price is trading into it and rejecting. All right, so now let's scale down the time frame. What do we see? Alright, well we have a 2-minute inversion right here. So we got a close below with this candle. It's kind of hard to see. Now what are we looking for? We're looking for continuation shorts to our next draw on liquidity. We're not trying to catch that reversal down here. Okay? And why are we, alright, this is very important. Why are we making sure that we're not trying to catch a reversal? Well, because price is already displaced lower. We're not trying to fade displacement. We're just trying to trade with it. Alright? So here's what your trade would look like. You get in right here. Okay? Like something like this, targeting draw on liquidity, so good risk to reward here. And let's see how it plays out. I'll pull it back a bit. There we go. As you can see, there's even another opportunity. If you missed that, it's okay. Bang, another inversion. And bang. That is how you would trade another continuation and another sell-off. That's your example. So look, you're not trying to catch a reversal down here. You could have. It would have made you maybe 100 points, which that's not bad at all. That's good. But look, you can catch a much bigger move for around 160 points, 3 risk to reward, simply by trading the high probability conditions. And the reason for this is because I know you guys notice this, but when you go and trade PRR, you see, or even AEM, is that like, let me just show an example. Your framework is like something like this. Alright, let's say this is like London low. Let's do London low. Say this is London low, you catch your IFVG to the upside. That's chill, you take your long position. Okay. Prices, like if your target is like London high, price is likely going to just keep pushing. It might rebalance a little bit before it goes higher. Price isn't likely just to sweep out London low, and like this has to be a prominent draw on liquidity. Price isn't just going to sweep London low, reverse, sweep London high, and then reverse again. That's very unlikely. You have a higher probability chance of just trading, okay, well, we have London low gets swept, okay, now I'm looking for continuation longs to London high. If London high gets swept, look for price to pull back. When price sweeps liquidity, it pulls back to rebalance the range. Look for a pullback somewhere around equilibrium and look to just continue that trend, because it's not very likely that price is just going to reverse again. You know, it's not going to sweep London low, reverse, London high, reverse. No, it's going to be London low, reverse, London high, pullback, expansion. Okay, I hope that makes sense. And like I say this in every video, if you have questions, just go to the free Discord and link in the bio. Alright, so that is basically the continuation model that I am looking at trading. There's going to be some tweaks to this a little bit as I've just started backtesting it, and this is a new kind of way I want to trade. But yeah. So there you guys have it. If you have questions, Discord and bio. And like I said, the one-on-one mentorship is going to be open as you were seeing this video. Book in a call to see if you qualify for mentorship. And yeah, like I said, we don't stop working until you get that payout, you achieve that profitability. So yeah, first link in the description. Peace.